Hi, my name's Phil Hoskins, Managing Director of Evolution Energy Minerals. We're a Tanzanian graphite developer with a development-ready asset, DFS mining licence environmental approvals, working towards final investment decision towards the end of the year. We've got a very coarse flake graphite deposit, just signed our first offtake agreement, covering almost 70% of the revenue, working through a framework agreement with the Tanzanian government, with diversified downstream strategies for growth. So really excited to be here today and talk about it.
Well, thanks for joining us here in Cape Town. You're over from Aussie based? Where are you based?
Yeah, based in Perth, Western Australia.
Fantastic. So what have you been here to do this week?
Here for Mining Indaba and the 121 conference. So getting out and seeing investors and also banks ahead of our project finance later in the year, and heading to site soon after this for analyst tours and government meetings.
Okay, you're literally leaving for Tanzania straight after this?
No, heading out tomorrow.
Fantastic. Okay, good stuff. Well, look, might be worth introducing yourself. Okay, you know, what's your background relevant to what you're doing now?
Yeah, so I'm a chartered accountant. Grew up in Perth. Worked with Ernst & Young for a while. Spent almost 10 years in finance roles and in property development in Australia and in London. The last 11 years has been in mining, initially as CFO of an iron ore producer, and then the last 8 years stepping into a CEO role and taking a company in the graphite direction. And this graphite project we're talking about is since the very first drill hole is, I guess, drilled under my management.
Right, okay, and so was that in a private guise, or because you recently IPO'd, right?
Recently IPO'd, and so there was, I guess, been a few corporate changes over that journey leading into this, and so Evolution was, whilst only 6 months old, was able to acquire the development-ready asset that I've worked on for those 8 years.
Okay, and who's on the team that's supporting? Where's the technical know-how?
The technical know-how is with a guy called Michael Bourguignon.
Yeah.
We brought Michael in recently. He's built 5 projects on the African continent and commissioned in the last 10 years in Ghana, Cote d'Ivoire, but critically to this project, Mozambique. So he was involved in the development of Syra Resources project, the Balama Graphite project. He got involved there at the commencement of construction. So I guess inherited the design, and he worked to get that project to conclusion, and it experienced some issues during commissioning, and I guess he was able to learn from the historical test work that had been done, and hopefully bring those learnings to our company. And so I don't think there'd be sort of a junior graphite company out there that's got someone like Michael to really de-risk the transition from where we are through to construction.
So he's relatively new. So who was handling it before?
We had a guy called Warren King. He was the project manager through the DFS phase. He's currently building Red 5's King of the Hills project in Western Australia.
Right, okay. So given you managed a lot of it privately, and we know you're advanced, okay? FIDs by the end of this year, great stuff. So what did you set out to try and do, and why did you go in a private context? How have you got to where you are today?
It was still listed, but originally in a company called IMX Resources, actually, but which was also the company that had the iron ore mine. But originally when we set out, it was just to define a resource, and we advanced it through 2015 to a
so what happened? So IMX spin it out?
In 2016, when we'd got to a point where we understood the product quality, and because IMX had some other nickel assets and things in it, that we wanted a dedicated board and management team just to drive that project forward. Right,
okay. So at the spin out stage, what did that structure look like? Who owns what?
So GraphX was spun out. It was new IPO investors that I don't know if I should recall the terms, but brought in a bunch of new investors and to continue the project. At the time, it was a PFS stage. We had environmental approvals, and one other thing in terms of the history of this project that I think is important is, because we were always maybe 2 years behind Syra Resources, who had 1 billion tonnes of graphite. We wanted to understand that the end-use market was less than 1 million tonnes per annum. And so if we had what they had, we probably didn't stand a chance in hell. And so one, I guess, approach to the development we've had, maybe different to others, was a commitment to understanding the market, which has seen me spend almost 250 days in China across 30 plus trips, just engaging with end users, understanding the applications. And I guess that continues to this day, but that was always one of the the key things early to understand, do we have something that's different?
Well, yeah, you could ask the market if they want it first. You can't produce it
Exactly.
and hope they'll turn up. Let's come on to that in a second. Let's stick with the kind of the valuation of the asset when you moved it over, and tell me a bit about the share registry. I know you've got some new IPO shareholders, but who are any names in there that we'd recognise, either institutional or otherwise?
Yeah, so the new IPO is in evolution, has brought in the Arch Sustainable Resources Fund, and
Amanda Van Dyke.
Amanda Van Dyke, correct. And so she's followed the project for 6 years in her various funds management roles in the UK, and we started talking probably 18 months ago about the role she was stepping into with Arch, and they're quite an exciting mining private equity ESG-focused company looking to invest in the decarbonisation metals, but do so in a way or ensure the investee companies are doing so in a sustainable manner. And we're their first investment. They've notionally put aside $25 million US to invest in the company and still have more to deploy, which is great for us as we move towards FID to have someone who's notionally there for 20% of the construction equity as well.
Right, okay. So let's talk about what you've got today. What do we need to know about the asset in terms of the economics?
Yeah, so it's an $87 million capital cost. This is a 2020 DFS, so relatively recent. $323 million NPV, 3-year payback. It's a 500,000 tonne per annum project to produce roughly 50,000 tonnes of concentrate per annum. Our feed grade's 10% to that. But what really sets it apart, it's not all about tonnes and grade in graphite, but product quality. Flake size distribution can drive a much higher average sale price and in effect higher margins. And we're one of the coarsest flake graphite deposits in the world.
Right. So you talked about trying to understand the market, and that, clearly you should, but it's surprising how many people don't bother. Right. So do you know, if you got line of sight as to whether you're going to do this as some kind of off-take to help with the financing of the CAPEX, or you're going to sell in the, I'm not quite sure how to spot market, the equivalent of that in market. What's your route to market?
Yeah, look, if we didn't need to get, say, debt finance, I wouldn't necessarily sign an offtake agreement. I know equity markets really love them as well. But there's probably a misnomer in the market that you need an offtake agreement to sell graphite, and that's not 100% true. It's all about product qualification. So as long as you've qualified with numerous customers, as we have, that product qualification's been a real focus of us over a long time, then you can sell spot, and your prices would actually be a little bit higher. But notwithstanding that, we do want project finance, and on Monday we did announce our first binding offtake agreement with the global leader of what's called expandable graphite and graphite foil. This is sort of the ideal high value use if you've got coarse flake graphite. The other side of the coin being if you've got fines, that's the sort of market that ends up in the anode materials. And so we're working on the fines offtake agreement at the moment. And that'll likely go into Western anode materials. Okay,
so you've got I guess two parts to that. So let's focus on how you get the CAPEX finance, right? So again, accountancy background, so you must have spent a bit of time thinking about this. So how do you think that's going to break down for you? Where's the money going to come from, and what type of money you're going to get in?
Sure, I think importantly, even though it is a DFS that's only 2 years old, we've been in an inflationary environment, so we are working on an updated DFS, which is likely to end up with a CAPEX of around 100. That's going to be concluded in the September quarter. There's still working capital and other things that we'll probably see a total funding amount in the order of 120 million US. How we're seeking to fund that, we're about to announce the appointment of a debt advisor who in Cape Town has been running us around, essentially lining up the banks. And so we believe it's a partnership between either South African banks or development finance institutions in Africa with the Tanzanian banks who have the appetite. We're not looking to push the gearing too hard. It is a commodity that banks are still sort of getting used to and understanding. So we're sort of thinking a 50-50 split between debt and equity, which would sort of leave you with a 60 million US equity check.
Why's that? Because normally people come in here and say, 70-30, 60-40, 50-50 is like, what's the risk there for the debt providers? Why
well, I think it's less risk for the debt providers at 50-50.
Well, it is, but it's like why would they not be prepared to do more? Because they make more if they lend more, but they have the kind of risk profile and mitigate themselves. So what will they? What are these?
Well, I think the graphite market itself, compared to other commodities, and you ask yourself the question, why haven't we seen a debt financing in the graphite space yet? The thematic is still very strong, always has been. There's some good projects around, and it is about the nuances in the graphite market, and pricing, and
it's slightly opaque in places in terms of pricing, right?
Correct. I've always said the people with the money don't understand the market, and the people that understand the market don't have any money. So we're slowly trying to bridge that gap.
But it's because it's a niche. Like if it's like, precious metals or one of the bulks, it's well understood. So for the banks, and I love the fact that it's African banks coming here and doing the debt, because again, that feels like it's the last 4 or 5 years that's been the move and the trend. You'd think they'd make a bit more effort to understand some of these. I mean, it's slightly esoteric at the moment. We could probably call it slightly esoteric.
Yeah, sure. No, they're definitely making the effort, and there's no doubt that, I guess, in the last 18 months, the graphite market outlook has just got better and better. The supply side being under threat in China, and the Western world trying to move ex-China. So there's no doubt they're trying, and it'll just take a little bit of time to educate.
Because it's been a short period. It's not, it really hasn't been that long. So they need to see some sort of consistency in terms of around pricing, etc.
Yeah, if you look, we started 8 years ago, and we were pioneers on test work and understanding and what I know about the graphite market this year compared to last year. You're just on this incredible sort of journey of understanding, and I think the banks also need to do independent due diligence, and it's like you say that the market's a little opaque, and so we'll help them where they can. We'll put offtake agreements in place with quality quality partners who add value to the product, but also demonstrate the general market for the product, rather than just that one particular customer being maybe the only person that could ever take it.
So what's your risk appetite, right? You talked about, you probably don't need to have these contracts in place, but it makes the banks feel a little bit more comfortable, and they don't know enough at this moment in time. Going forward, would you kind of move to, once those contracts have run their term, just do it at market? Is that? I'm trying to understand your mindset in terms of risk appetite.
Look, I think we could go elsewhere, but I think that would be probably disrespectful to the qualification periods that our customers put in place to sign those agreements. And they spend a lot of money to qualify, and they hope to have supply for a long period of time. So whilst our agreements are likely to be sort of 3-year term, if they've been good customers over that time frame, I don't want to pull the rug from underneath them. So my intention, because we are working on a couple of downstream strategies on both the coarse and the fine flake, and subject to the success of those, and as those move forward, I'd like to see that come back and cause an expansion in the initial sort of project size.
So how many samples do you send out, and how many qualification processes did you run through?
Oh, there's probably 20 customers in China. There's similar in Europe and similar in the US, and it's interesting how you go about it over the journey. That one of the first calls I made back 7-8 years ago was to a German company, and when he said I only buy 6,000 tons a year of graphite, I thought, oh my God, I'm going to need 10 of these guys. And so everyone then has the lure of China, where they promise big tons, and maybe they can't take all those tons, but. And I've sort of come full circle that graphite is a marketing game, and we'll probably end up with 20 customers once we're in production. And you want to be able to sell to as many different people and achieve the highest price possible for your product. And but I think that's sort of a phase 2. Is I think we need to respect the offtake agreements we sign. It's probably going to end up being 80% of our total production. And with that 20%, maybe a few downstream applications and sales to other high-paying customers as well.
Right. So in terms of, you've explained that where you're at today in terms of the product. Is there any desire to kind of move further downstream and do that yourselves, or would you feel like partnering is the best route? I mean, how do you play it?
Yeah, there's a 2-phase downstream, and so I'll leave the anodes to the side, but the coarse flake downstream that has always been, I've always had a really heavy focus on the downstream markets or the applications for coarse flake, given our product was so coarse flake. And so part of the agreement we've signed with this global leader for expandable graphite and graphite foil is a joint partnership to go downstream in Europe together. That's only at MOU phase. We're currently working through the joint venture agreement or technology agreement with them. But the idea is to look maybe in Europe I was going to say Germany or other places in Europe to go downstream and produce those products. And they're hugely value accretive.
Yeah.
So you absolutely need his technology. Without their technology, we wouldn't be able to do that. And Downstream generally, I think there's three things.
Yeah.
Is my product suitable? Do I understand the market, both pricing, applications and things? And do I have the technology? And if you've got those three things, then you can do it successfully.
Absolutely. And you under any pressure, because I know, in the current geopolitical environment, Africa's been quite neutral, wisely, I think, sort of sitting back and watching the world implode.
Yeah.
Are you under any pressure from the banks to, favour one region rather over another, in terms of you kind of got this European EV ecosystem spending hundreds of billions of dollars, US doing the same, and are they saying, oh, you need to be ex-China? If you can be ex-China, you need to be ex-China. We're more comfortable with that.
I don't think the banks would mind too much.
Right.
Having said that, enforceability of an offtake agreement in China, banks will probably view more dimly than a sort of a Western corporate with a decent balance sheet. So, but I don't think the banks mind as much. But I do think equity markets really care about that. And fortunately or unfortunately, so that our CourseFlake offtaker is a Chinese group, and it's a group I've been wanting to sign with for 7 years. So I'm definitely not going to apologise for doing that, because these guys are selling to Apple and Samsung and some of the highest caliber companies in the world. And but it's the fact of the matter on the CourseFlake side of things is that the ex-China market won't sign offtake agreements pre-construction, and is probably a little bit too small as well. So I guess it's something that we've had to do is to sign with these guys. Again, though, I don't want to apologise. I'm ecstatic to sign.
I get that money's money, and when you're kicking off it, you welcome it. Can we come back to the equity component, right?
Yeah.
Because with more technical commodities, whether it be your lithiums, your uraniums, your rare earths, etc., and I guess it fall heavily into that category, is you've got the choice of going after strategic capital. Where someone's going to bring some know-how, access to market, and all of those wonderful things that come with it. And then there's just money, right? Where you're still in control of your destiny, because you're the brains trust in the room at the time. So again, preference there.
Look, I don't think we're trying to do any project-level equity deals. I don't think we're trying to do any sort of corporate-level equity where someone would be taking more than 20% in board roles. I think that generalists are getting to the point where they need to have one graphite in their portfolio, and then those strategics you talk about that are the critical minerals funds and things are likely to have more than one. And over the last couple of years, it's been stark how advanced people are getting, and how many more funds there are out there, and particularly not just graphite or lithium and those metals, but also guys that are developing them in a sustainable way as well. So
I guess there's that.
ESG side is
we'll talk about your award in a minute. We don't.
Trying to get there.
I know. Here it is. No, we just on that sort of the market side of things. I know that generalists are kind of coming in now into EV. Everyone's in raptures about what EV is going to do for lots of commodities and lots of markets and verticals and so forth. These generalist funds that presumably you're talking to, do they take a little bit longer to get over the line, or are they just going, oh, it's got EV in the headline, let's go? I mean, how easy free flowing is the money out there?
Yeah, look, I'm not saying they're in our stock right now,
right?
And the funds we've been talking to and the ones that are sort of looking to buy are still the more critical mineral funds, but certainly a lot of the brokers we're talking to are finding that a lot of those generalist funds are out there are starting to take those deals. So we're still relatively early in, I guess, this company's life, getting it back out there, promoting it, and we've been sort of head down, bum up, just getting all these sort of streams of work moving.
Right.
So I think that'll all come after we're in Tanzania. We're in London doing some more marketing. And
are you at the 1-to-1?
We are, yeah.
Okay. We'll see you there, I'm sure. It just sort of intrigues me how many of these sort of generalists have come over from the tech side and looking at this. What is this mining malarkey? Yeah,
well, 3-4 years ago, it just wasn't. It wasn't there. And I think graphite for a long time was under the cloud, if you like, of that company, Syra Resources. And while it was coming in to build a 350,000 tonne per annum project, everyone else was sort of saying, well, I'd rather see how that plays out before investing in you guys. And then when that didn't go so well for a number of reasons, probably marketing preparation and technical as well, it then caused a bit of a market hangover that if they can't make it, how can you? And
exactly.
Certainly we tried to differentiate ourselves in terms of being coarse flake and different markets and those sorts of things. But anyway, I think the market now, the graphite market and equity investors looking at it have moved past that. Syrah's stabilised a little bit. Certainly the market prices of graphite are moving up, and so that's what now is, I guess, causing that interest.
Okay, and talk of tarnishing other people by association. Tanzania, it's had a rough few years politically, in country politically. Things seem to have changed. New president in place. She seems to be inviting foreign direct investment. How are you find? Has it made life easier for you on the ground?
Yeah, it definitely has. And we're only there 7-8 weeks ago. And I guess one of the first things she did was to sit down with the big companies in Tanzania. And
you've got BHP, Barrick.
And not even those guys, but Dangote has got a big cement factory and a lot of these different companies, and saying, guys, what are the things holding you back, or what are the concerns? And foreign investment was a big one of those. And she spent a lot of time repairing that, travelling the world with the Minister of Foreign Affairs, but then on the ground, shuffling the decks a little bit, doing so respectfully so she doesn't lose, I guess, the support of the rest of the party. Well, and the party. There's still people within the party that were very supportive of Magufuli, so I was doing it respectfully to turn the ship around slowly. And although I've been surprised how quickly she has turned it around. And from a mining point of view, when you're seeing BHP investing in Kabanga Nickel, when you're seeing 3 framework agreements signed towards the end of last year, excuse me, you've and then our own meetings with the government about just being very facilitating about, okay, well, we know you need a framework agreement, and we're literally working through that at the moment. So.
But there is a mining rule of law.
Yep.
Nothing's dramatically changing there. Sorry, are they getting rid of the red tape, the paperwork? Well, not reducing it. Are they making it easier to do business?
Yeah, look, I don't think there's necessarily red tape. I think our concerns when sort of 2017 came through was and our messaging to the government was that we are supportive of the changes on the whole, but it's seeking clarifications where there was gaps between regulations and legislation, or a misunderstanding of what some of the new rules meant, and so that was a long period of engagement for us to try to understand those things, making detailed submissions about how Tanzania may be differed to other countries within Africa. And I think through that period of 2017 to 2021, you were sort of hitting a ceiling. The meetings were getting taken, but the message wouldn't be communicated back to the president in a favourable manner. And that's what appears to have changed this time, is from the top down, there appears to be a directive to be more facilitating of foreign investors like us.
That's kind of interesting, because I think we've been talking this week, certainly with companies with African assets, about the ease of doing business in Africa. And, I think overwhelmingly, I can't think of one instance where people say they're struggling on that front. The permitting licensing process seems to be quicker than perhaps elsewhere. Would you agree with that?
Yeah, look, we haven't. We've had our permits for some time. But to have met with the government 7-8 weeks ago to talk about our framework agreement, to then be travelling there to talk about it 7-8 weeks later and being very close to finalising it. I don't know. That's pretty quick time for any government, and the fact they're open to that as well is really good.
Okay, but here's the thing. People want to know that you're doing it the right way. There's no shortcuts. There's no backhanders, no suitcases.
Of course not.
And things are being done the right way because the country wants to do it the right way. The ministry wants to do it the right way. The minister wants to do things the right way. We're seeing this, big push with the last year. It's been ESG. Net zero carbon credits, greenification of lots of conversations, and people either like it or they don't, but there's a big conversation going on. For you, again, on the ground, is it important to the Tanzanian government? Is it important to you? Does it add to your costs? Does it delay things? What's your take?
So I don't know that ESG is necessarily a requirement of the government, but I believe for foreign investment, for banks, it very much is. So I guess if you've always got project finance, bank debt, historically you've needed to adhere to equator principles. And so I think a lot of mining people, hardcore mining people, look at this ESG thing and go, hang on a sec, we've been doing the E and we've been doing the S and maybe the G side with ESG committees and other things we can do a bit better. But for me, and I was a little bit that way as well, but certainly Arch, our major shareholder, have played a great educational role for me in terms of what's required on that. And, but more so where the really conservative money is coming from. There's a lot of money out there that really likes the decarbonisation theme, but thinks that mining is a polluting sort of dirty industry. And 99% of the time we're doing a great job, but it's these high profile sort of tailings dam disasters, cultural heritage destruction, child mining issues or whatever that none of those big funds want to be associated with. And if they are, then where they're getting their money from is going to get cut off. And so it's making sure that as a company, there's so many things that maybe, or even frameworks or things that we're not aware of. And we're working with a group called Digby, who's been sort of by the industry, for the industry. You've had financiers say, look, we're not happy with the normal ratings agencies and we don't think they understand the mining specific risks. And so they've come in with a framework and we've adopted that and transparently reported that. But as we've gone through there's a whole bunch of things you just say, you know what, we should be doing that. And it's not. It definitely goes to reducing your risk as an organisation, and what you're really wanting to stop or ensure that that social licence to operate and things. Ultimately, if our mine has to stop because of community reasons or whatever, it does have financial implications.
Absolutely.
And so it's the snowball effect of all those things that it's reducing that risk to make sure that down the track, we're not walking into those sorts of problems.
Brilliant. Yeah, I think we spoke with a company called Invert doing something similar, but well, there's some good guys out there trying to do things for the right reason and hopefully, improve mining's brand, for want of another word. But talking of awards, which you won't, I hear you picked one up today.
I did. I didn't actually bring it.
Do you like my segue there?
Yeah, that was so natural.
Slick.
I didn't actually bring it with me. Someone
really?
took my bag back to the. Yeah,
Too
that's
big.
right. You would needed a widescreen camera.
So what was it for?
For energy, Junior Mining ESG Awards for energy efficiency, and we essentially made the submission based on a lot of the work we're doing to work towards net zero carbon mining operation, which in graphite we would be the first to do that. And some of those things. So we've done the life cycle analysis of our carbon footprint already, and if you've got sort of Chinese graphite and normal African graphite, we're still lower than that, and that was on our DFS, which was a full diesel powered power station, and we're going to be working towards a hybrid solar and diesel, so introducing some renewables. We're also looking at electrifying the fleet around the mine itself. We are investigating whether we'd be able to truck using electric fleet, but at the moment the technology is such that I think you'd need a couple of charging stations on the way. So certainly got a vision towards that. Now, so then you end up with a bit of a carbon footprint, and the other thing we're doing is working with some terrestrial forestry plantations and mangrove plantations to be able to secure the credits to move to net zero. And it is a complicated and it's fast moving, and we're learning a lot, but looking to move towards net zero, which we think is really important for customers and for financiers as well.
I agree. Well, good luck with that. Thanks for coming and telling us the story.
No worries.
Appreciate that. We'll look out for you and stay in touch. Let us know how you get on, okay?
You will do. Thanks a lot.